Our view is that gold is only appropriate if you have a very strong view that the dollar is going to be debased. should we stop there? I mean,
Yeah.
The land of Arcadia.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. In the midst of a historic gold rally, in the midst of what hopefully, well, it's interesting to think before something happens. Maybe we're in the midst of a historic silver rally. I think there's a lot to support that is the case. Although Goldman Sachs doesn't think so, at least on the gold part, as we will dig into with my dear friend Rob Keens of Gold Silver Pros and also the North American Monetary Metals Conference. Did I get it all correct there, Rob?
You got it.
Yeah. Which is only a week away, next Thursday and Friday. So, yeah, well, a lot of fun stuff to dig into there. I'm excited about that one. Real quick, before we get started, tonight's video is sponsored by Bluestone Resources. And Rob, I know you are familiar with Bluestone Resources. We actually talked about that before I brought Jack Lundin on the show. And how would you summarize the project, Rob, as one of my mining stock experts here?
Mm-hmm. So they have the Cerro Blanco project out in Guatemala, and the thing to know about that, the one thing you want to know about this project, it's very low all-in sustaining cost of production of $579 an ounce, which means at 1,900 gold, they're going to make an absolute ton of money. The second thing you want to know is their pre-production. So they're going to get that nice little bump when they get their mine built and the market starts paying attention to them when they start producing. So good time to invest in a good low-cost gold producer.
Well, thank you, Rob. And folks, at the end, just to make it as easy as possible, there will be an end card to the interview that I did with Jack, so you can find out plenty more about that. And I guess especially if you take the approach that do the opposite of what investment bank tells you to do, especially Goldman Sachs, that yes, the same bank from legendary fame of, what was his name? Carl Lewin, who talked about their shitty deal. Rob, in a future appearance, so much Goldman Sachs fodder to cover here. But you remember that press conference where, I was watching it on the New York Stock Exchange at the time, my trading post, and he kept saying, so you, Mr. Montauk, you sold that shitty deal, didn't you? You knew it was a shitty deal and you sold the shitty deal. And the senator set a record for most times saying shitty deal in one congressional appearance, as far as I know. Maybe at Silverfest we'll have a raffle, and anyone can find one that tops that. We'll give away a free ounce of silver. Rob, although I will limit my banter here, and because I want to give you a sufficient time to dig into this one, where according to a Goldman manager, gold has no role in a portfolio of wealth clients. Where to begin? Now, with all fairness to Mosavar Rahmani, the actual headline there, I didn't see the no role that they put in quotes, but they're quoting in big blue here. Our view is that gold is only appropriate if you have a very strong view that the dollar is going to be debased. Should we stop there? I mean, I don't know how anybody could have that. I mean,
the funny thing there, Chris, if you look at the futures market, Goldman's in there buying. So it's do as they say, not do as they do. While they tell you not to buy gold, they're in there buying it, probably because they want it to be cheaper. They're standing for delivery on quite a few contracts at the end of July and August. So they stand to profit handsomely if they can get gold cheaper. So, of course, in the public, they're going to say don't have gold because there's not a whole lot of gold rolling around right now and they want it. So I think you have to be careful when you listen to the public stance of some of these banks. The banks are in there to make money. They're not in there to be your best friend. So I would take what they say sort of with a grain of salt and do your own research. As far as
Rob. I thought when, what was it, Henry Blodgett? What was the other guy who was calling all the stocks piece of shit stocks to his, was he from Citigroup? Forget that guy's name. It's funny. I actually remember reading his book right before my Wharton interview, which was the theme of, wow, maybe if you provided least advice that was your legitimate opinion. So I agree. If you're the chicken, maybe you don't want to ask the wolf what to have for dinner, but maybe we could start here, Rob. I mean, I don't know if we will be able to get through their whole paragraph. This one might be so flummoxing. I'm going to read this again. Just maybe I missed it the first time or I imagined it. Our view is that gold is only appropriate if you have a very strong view that the US dollar is going to be debased. I mean, now, what on earth could give someone that impression of the? Oh, yeah, that's right. The Fed gave us, that people waited 50 years for Sunday night announcement. That's March 15th, Ides of March, which, knowing the cultist elites that like planning these things, I find interesting and cute. Although, of course, 8 days later, that wasn't enough. So Federal Reserve just pledged asset purchases with no limit to support markets. And of course, now we know March 23rd and 24th, when there was so much pressure because of that the EFP gold market, the exchange for physical, broke. And of course, maybe Goldman Sachs didn't catch the recent Federal Reserve news conferences where Fed plans to hold rates near zero until at least 22, which fortunately, Rob, we know means that they are never going to raise them. So is it me or is it Goldman? I mean, unless you have a strong view. What do you say there, my friend?
So James Rickard said something equally stupid in a recent Incrementum interview, and I almost fell out of my chair. James Rickard's quoted as all these conferences being some sort of dollar or currency expert. And he was having an argument with somebody that was being interviewed at Incrementum, and he said, the dollar, can never go down as much as they print because Europe wants our dollars and everybody wants our dollars. And I'm like, James, are you aware that China, Russia, Iran, and all these BRIC nations have basically dumped the dollar for international trade? And the only reason they're holding on to dollars is to pay off their dollar-denominated debt. And when they're done with that, they're not going to have any more dollar contracts. And at that point, they can also dump treasuries because they're not going to need them. So in international trade, people are already dumping the dollar. And the more you debase and the more that they dump, it means those dollars are coming back. The U.S. has been in this position since 1971 when Nixon took us off the gold standard of being able to export our inflation to other countries, which has destroyed numerous countries' ability to maintain wealth. Well, that's going to come around because other countries are tired of our bullshit and they're going to send it right back to us. And further, if you want to talk about how much money's been created, you could go talk to Dr. Mark Skidmore of Michigan State University or Catherine Austin Fitts, former HUD Assistant Secretary, where they documented between 2000 and 2015 how the Department of Defense and the HUD had spent $21 trillion and forgot to notify anybody. And then further, they've done research from 2016 to 2019, and they're documenting tens of trillions more dollars, which hasn't been reported yet. But I know for a fact it's true because I have talked with Rob Kirby, who's good friends with both of them. So there is a massive amount of money out there. And maybe Goldman has no clue what's going on, but as an investment bank, I find that hard to believe. There's an absolute crap ton of dollars, and it's coming back to the U.S. because nobody wants it. The Chinese are aware, the Russians are aware. That's why they're setting up gold contracts in rubles, contracts in yen, and it's not going to be too many more years before Americans are left with a big pile of money and a lot less goods because guess what? We don't manufacture anything anymore.
Well, Rob, that makes a lot of sense to me. And I imagine most of the people listening, Goldman doesn't have that view. We think the dollar maintains its status as the reserve currency. It's interesting. I mean, I wonder how long that will be the case. Dollar can cheapen a little because it's moderately overvalued, just a touch. But that doesn't mean it's going to be debased. Right? Maybe I met. Oh, no, I didn't imagine it was there. I don't know what happened. And that we were going to have huge inflation and that gold is a substitute. Rob, actually, perhaps you could, you mentioned it, but perhaps you could touch on it again. I'm hearing people lately, it was our friends at JP Morgan the other night that said there's no inflation or someone I was quoting yet. I think the inflation, like you mentioned, A, has been exported abroad, and B, I mean, gee, if I'll bet if you're, let's say you're in your 20s, you're getting married and you're thinking about buying a house, those people probably aren't appreciating the real estate prices as much as Ben Bernanke thinks that we should. So there's a lot of inflation in the financial markets. So when they say, and you can even have inflation when the stock market is going down, because maybe the stock market without the money printing would have been down to 15,000 or 10,000. So even though it goes down, you can still have inflated levels. So Rob, is there inflation here? Am I insane, or is Goldman missing it?
There's tons of inflation. What the government has done through hedonics and substitution and other stupid BS, math, is to take what they basically do is when they see something inflating in price, they take it out of the calculation. That substitution or hedonics. In chapter 2 of my book, which I wrote in 2010, I spent 50 pages explaining this. People can go to my website and view that book now for free. Also, 2 weeks ago, I had an interview with John Williams of Shadow Stats. And what John Williams does is he goes back to the way that we used to measure inflation and other government statistics in 1980. In other words, since 1980, the government's been filling with the numbers. He says, forget that, I'm going back to 1980. And Shadow Stats is the only place that you can go that I'm aware of where you can look at inflation calculated in 1980. So if you want to compare, the increase in energy prices between now and 1980, his is the only site which you can do it because the government statistics now won't allow you to, because the measurements aren't the same. It's like saying, I have a measuring cup and I need to put 1 cup of flour into something, but only having half a cup. You're not going to get enough flour and your recipe is not going to come out correct. One of the reasons the government has incentive to do that is because it reduces the amount of money they have to pay off for all of these social programs, and it does a lot of other things. It allows them to print more debt and pay it off with cheaper dollars. So they have an incentive to lie, and I would not believe anything that the government puts out as far as a statistic goes.
Yeah, actually, it's funny you mentioned that. I don't know if you caught last night's show. I couldn't resist highlighting that. So far, the only 2 means of deficit reduction I've ever heard out of the government in my entire life were when in 2013, former President Obama actually advocated committing accounting fraud by changing the CPI formula to screw the Social Securities and Medicare programs. And apparently they actually were serious about that $1 trillion platinum coin. And a senator or a congresswoman actually reintroduced that earlier this year. So you can see that, like you said, let's take those numbers with a grain of salt. But anyway, it was interesting here as this Goldman commentary continues. She said gold isn't a great deflation hedge. I don't think it was supposed to be, although ironically, I would say that it is a deflation and inflation hedge, because whether the Fed just continues printing, which I assume they will do, I think you'll see the doors blown off the gold price. But even if they tried to undo all the QE and raise rates, didn't we see, Rob, in the end of 2018, how quickly this thing started collapsing?
Yeah, Powell tried to tighten in 2018. We had a 20% stock correction, and that started the gold bull market. If you look at the chart, it started when Powell tightened and tried to basically slow down the growth of money supply. And gold's been going straight up ever since, and I don't think it's going to stop. So we're at the point, it doesn't matter. If you read the work by Kenneth Rogoff, we're past the point of no return. He in his Harvard compadre basically wrote a book about how once you get to 90% GDP of debt, it's basically the end of the fiat money system throughout history. We're way past that now. So it doesn't matter what the Fed does. It doesn't matter if they tighten or if they print money. They can't stop what's eventually coming. I guess if they print more, it'll happen faster, but they can't stop it. And history has shown that to be true. Yep.
And then we have, of course, it's funny, doesn't generate income. I mean, that one was valid until we, where it's like, well, gold, you get no interest, and you can go out, get a bond. But now when we're in negative interest rate land, but let's still throw out the doesn't generate income anyway.
Well, it does generate income because as gold money, James Turk has pointed out, you can lease it. So those lease rates are actually pretty decent and you can generate income from gold.
Although maybe don't want to lease that to JP Morgan.
No,
If
because
you're
you'll
going to
never
get
it
that back.
Yeah.
And then I got a final one here for you, Rob. Secondly, she explained that gold is hard to make a case unless investors hold the, bizarre, wacky perception that the current bout of weakness in the US dollar is the start of a more severe downturn for dollars and a possible
Mhm.
change in leadership of the monetary unit that is viewed as the bastion of stability, the number one currency amongst all of the peoples. Which I thought was, I guess seems to make enough sense. Although, Rob, what I don't get, hopefully you can explain to me. Here's
Mhm.
the Fed's balance sheet, which went from zero to about $900 billion in the first 95 years of their existence,
Yeah.
then shot up to two in 2008. And we go fast forward here. Here's 2011, around 3 trillion almost. That's where gold was 1900 the last time. And if that's 3 trillion, we've more than doubled that. We're up to 6 trillion. Ironically, you mentioned Dr. Mark Skidmore before. I actually emailed him and said, if there's that much missing money, how does that affect the money supply? Even he couldn't calculate that. And the guy's a freaking PhD economics professor, currently very close to 7 trillion. So again, is it?
Well, if you go back to that chart real quick, Chris, what you're seeing is a hockey stick. And in financial terms, that's usually not a good thing when you're talking about debt. The way the debt system works is money and debt are opposite sides of the same coin. To create money, you have to create debt, but you create more debt than money because we're a fractional reserve system. So when you see a hockey stick in the debt, that means that's why the Fed's having to print. They're having to print so much money to help extinguish or to service that debt. And that's always the end of a debt-based monetary system. There's no way around it. The math says you cannot get around it. And that's why they're never going to stop printing. They can't. If they stop printing, we go to a deflationary depression. So they have two choices. Deflationary depression, which scares them to death, or hyperinflate the currency and pay off the debt with worthless dollars. I think they're going to hyperinflate, but either way you go, you're going to want to have gold because it's the only way you're going to have a store of value. You're not going to do it in debt, and you're not going to do it in dollars.
Well, I hear you, and that's why I'll reserve my right to update and adjust this. Although, as I've been thinking about it, I guess the money that I earn, in the next couple of months and years, and I'm not saying anyone else should do this. By all means, you probably shouldn't, but I don't know that diversification lesson too well. And at least as best as I can figure out, primarily silver. Maybe we'll get some gold. I think I picked up some Bluestone shares the other day.
There you go.
But to me, even as someone who is a former equity options trader, which is short term in nature, I just plan on sitting there and leaving it. And I'll bet against Goldman and their view. Here we see closing the day about 1956. And Rob, before we wrap up, if you could just again let folks know what we're going to be doing at the conference next week. And I'm curious if we will be able to discuss things of whether that's perhaps a spoof that the Department of Justice has been arresting a cadre of traders for. In fact, this one I find particularly special because it matches what Andrew Maguire reported to the CFTC in that email where he said, watch, and on those announcements, they'll let gold go up first and then smash it down. Silver's chart went even further down. But Rob, can we talk? Will we be getting into good stuff like that next week at the conference?
I do believe, Chris, we are going to have yourself and Stuart Englert, who wrote the book Rigged, in a big discussion about precious metal interventions. You guys should definitely tune into the conference for that. We're going to have a lot of fun. That's a really interesting discussion, and it's one that needs to be had in the precious metals market. A lot of analysts don't recognize that, but we've got tons of proof, and you guys have written the books to prove it. So I think everybody should tune into the conference for that.
Well, I sure agree, and I'm going to pull up your page right here. This is Rob Keens once again of goldsilverpros.com. One of my favorite analysts. I think you're the smartest guy we have on the show, and also a very good friend. And you can see right on the front page of goldsilverpros.com, there is the virtual conference. It is free for attendees. I know you're bringing in a bunch of mining companies. Let's see. Where do I find? Okay, you got the
Just scroll down to the very
here.
bottom.
You got my man Alex Newman, David Morgan,
Yeah.
Chris Marcus, whoever that guy is. I heard he talks about silver a lot. Handsome Dave Kranzler, and Kenneth Amadori. Florian Grumes, who has talked about a triple-digit silver price. I love that picture of Kranzler's haircut you got there. And Steven Swatton of K2 Gold. We just had him on the show recently too. So anyway, thanks for joining me, Rob. Again, you know, folks at home, make your own decisions, but this match is my experience from Wall Street of how the banks do things. And Rob, I appreciate your putting on that conference where people want to hear the non-Wall Street view. You really have a great guest lineup, and we'll look forward to being there August 6th to 7th. Link is in the description field below right there, so you can click and sign up. Free for attendees. And again, tonight's video is sponsored by Bluestone Resources, which you can find out more about by clicking on the video that is coming your way now.